Hello folks, multifamilygeeks.com here. This is Max Rock. Kind of going over another video on our underwriting portfolio trainer, we call it. We call it that for several reasons. Number one, it's a free template for you to underwrite multifamily properties on. But number two, it's based on the idea that part of underwriting is sort of a constant training or learning experience. Almost every property we underwrite seems to have its own unique criteria or characteristics or issues or value adds, etc. So we think of underwriting multifamily properties, as buying right. It's if you've been in real estate any amount of time, you know that the way you buy a property is often determines how much of a return you're going to make on that property. So underwriting is simple if you're dealing with a single family home. If you're a single family flipper and you're out there, examining a deal, do I buy this house or not? You can run the numbers in your mind. You can just take the price. You can come up with your understanding of what kind of work you're going to do to the property. You know how much it costs you. You know your suppliers. You can add all that up very quickly. Almost instantly you can evaluate a property, whether this is the right price or not. And you can come back and go, I can give you this amount of money for this property. It's distressed. I need to do these things to it, and I know I can put this amount into it in this amount of time, and I can sell it, and I can make this amount of return. And you have your minimums. You have your idea of if I don't make a certain amount of return, probably not worth the work. And so I'll just take the next deal. Underwriting multifamily properties is very similar, with the exception that now it becomes impossible to run the numbers in your head. Okay, it just doesn't work. If you're working on a 200 to 300 unit multifamily property, you're going to need to do some analysis of that property, and you need to spend some due diligence on it. So what makes our template an educational tool too are several things. Number one, I would say as you go to each of these tabs, there's tabs along the bottom, you'll see quite a few. As you scroll down, you'll start to see different pieces of information input directly into the template. So this is the welcome page, the first thing that should pop up when you're in the template. Here are Multifamily Geeks investment criteria. This does change over time, so if you're looking at this right now and I'm reading it to you right now, just be aware that if it's 2 months or 2 years or whatever later, this can all be different. Okay, so you'll want to keep up with investment criteria. So we're looking for multifamily properties. 200 to 300 units is what we prefer. Of course, when someone brings us a deal, all these preferreds, right, start to fly out the window depending on how good the numbers look on the deal they bring. We like Class C overall. We will consider Class B properties preferred, and I would just tell you straight out right now, the most money we've ever made have been on Class C properties, right? Yeah, they're more work. Yes, more of a pain. For any number of reasons. Right, but in terms of the returns we've made on at this point, 9 syndications we've been involved in, a large number of those have been C-class properties, and the greatest returns we've made are on C-class properties. We like low-rise garden-style preferred, wood-framed, stucco, or siding exterior preferred, pitched roofs always preferred. In fact, flat roof buildings will have an upcharge in maintenance percentages. Different underwriters might quote different percentages, maybe 2%, maybe 5% of maintenance issues will now go up depending on that flat roof versus a pitched roof. At the moment, we like 3 to 15 million purchase price. That's preferred. That's been hard to maintain in this market. Nowadays, 200 to 300 units B-class can be 20 to 50 million, I guess, 20 to, not 50. But 20 to 30 million we've seen, okay? Yeah, my brain is like just exorbitant pricing for multifamilies these days. So we like 3 to 15 million. That's what we can handle in terms of just ourselves. We can bring in other sponsors too to go beyond that. We prefer 80% plus occupancy. We like agency debt. That's why we like the occupancy numbers. Of course, we've done ones where we had to go bridge to agency first, bridge loan first, which means the occupancy did not meet agency debt requirements. We prefer 1980 or newer. Of course, we've gone to ones older, and we're underwriting 1960s and 70s properties all the time we see, but that's what we'd prefer. Deferred maintenance preferred. if somebody's already gone in and fixed up every unit, then I'm not sure what we can do to it, right? We prefer deferred maintenance. That's the whole idea of value add. And if you're a single family flipper and you roll into a brand new home, what can you do to that property, right? Nothing. You need some level of deferred maintenance. Now, thinking back on the profits we've made most, of course, if it's cosmetic and you can put in the least amount of money and get the biggest bang for it, that's another part of the whole issue, right? So we like in Atlanta, that's where we've gone. We prefer north of I-20, although I'm telling you every single one of these rules we violated. That's why they all say preferred. Or a 2.5-hour drive from Atlanta in any direction. We're in property right now in Birmingham, Alabama, which fits that criteria. We like a good mix of 1 and 2 bedrooms and baths. 1/3 1 bedrooms, 2/3 2 bedrooms is nice. Amenities preferred, leasing office, pool, fitness center. Parking spaces for all units is preferred. We'd love to see 2 per unit. Individually billed preferred. We don't like all bills paid. They just get awfully messy and we end up having to put in sub-metering, etc. We like a 1-3-5 mile income of 60K. Again, we violated that on some purchases. We like a 12 to 15% annual return. That's dictated a lot by our investors. If they can't see that kind of return, they're going to be less likely to come into our deal. We like a 6 to 10% cash on cash return, a 1.6 debt coverage ratio or better. Here's some of our other, and I'm not going to read all these to you, but you start to get the idea. Under each of these tabs, let's go to property number 1. And this is probably the lengthiest training segment under this, right? So this is what the underwriting template looks like. This is a simple template, and you do this called, like a quick underwriting first. And if it proves to fit that criteria, then you're going to click the comprehensive tab, and now you're going to go the full distance, and you're going to underwrite this thing, including all the bells and whistles, right? So this underwriting template will meet your needs for, number 1, a quick underwriting template. This should take you 30 minutes or less to process the T12. See other videos on that. And by the way, there is a video tab here, which can help you navigate some of those. Learn how to underwrite multifamily properties. There's some links here. Learn how to underwrite multifamily properties with the T12. Okay, so here's some other things, how to process the rent roll, etc. And this will be different by the time you see it too. Another aspect of this template which helps it to be a training template for you, right? Now, it'd be nice if you have a background in real estate, right? And if you're a flipper, I would call that definitely a background in real estate and in investment, because you're going to take that knowledge and leverage it by going into 200 to 300 unit multifamilies. So as you scroll down through here you're going to find a lot of instructions on how to use this template. It'll talk about filling in vacancy. I'm just kind of reading some as I go. Property taxes. It'll talk about our understanding of that, what our criteria is. It'll sometimes reference the industry of what the industry believes, repairs and maintenance, the different expense categories. And this is a great place to start. If you've never underwritten a multifamily property, you can read these and start to build some background. For me, it's a little bit hard to just read and learn, right? I need to see, and then hence go to those YouTube videos where it's a little bit easier for my brain to digest that. It kind of depends on the type of learner you are, right? Some of us are auditory, we like to hear it. Some of us are kinesthetic, we like to feel it, right? And some of us are more visual. So it kind of depends on how you learn, and some of these will meet your needs better than others. Then there's a whole vocabulary section here. What is gross potential rent? What's loss to lease? What's gross scheduled rent? What's total rental income, right? What are these definitions as we see them? And we're not the end-all be-all of these definitions, right? We just kind of write it as we know it. And in the end, I don't know if I'm a very good writer, so if you're reading these and it's not the most perfect writing ever, I apologize for that in advance. I'm doing the best I can given my English skills, okay? So. But a full list, you can see quite a bit of deliberation over what we think those different definitions mean. And as you move to property 2, this is a portfolio trainer. In other words, it's designed for you to underwrite multiple properties of a portfolio deal on the same template. As far as we know, we're one of the few companies that even has one of these things, let alone gives it away. Okay, we do know another company that likes to buy 2 multifamilies, fix up one first, sell it off, and then pay out investors and returns right then and there. And so that's a great strategy. You can use this with that kind of strategy of buying multiple multifamily properties. And there's a cool feature here too. You can put in all 7 properties. If you see the tabs, 1, 2, 3, 4, 5, 6, 7, and a combo tab, all the properties roll up into the combo. And then each of the properties can be selected as on or off. This property is on, you can go back and say off. And now when you go to the combo tab, it will not include it. Notice this chart over here that says property 2 is off right now, right? It says no, it's not included in this combo template. So that's pretty cool. And again, I don't know that many other templates out there that feature this. I've seen a lot of templates in my day, okay, but I haven't seen this. We love it because you can underwrite a portfolio. And this again is part of the training aspect of what we believe we offer students to the multifamily space. Is we offer sort of a unique experience of, not only should you be thinking about being an investor yourself, but you should be thinking about deepening your understanding of the investments you make. And if you're investing in multifamily, you ought to be able to underwrite, because you're going to check out any investment before you make it. You're going to underwrite it. Just because a syndicator tells you it's a 15% IRR to LP investors, you don't trust that as an investor. You go back and do your own due diligence. Okay, so on this one, back to the point of this video, is there's shorter instructions on this one because it's basically the same template, right? So then you've got Prop 3, right? Prop 4, Prop 5, Prop 6, Prop 7, and a combination underwriting template that rolls them all up into one. I can check which of those prior templates are on or off. And then that rolls up, the combo rolls up into this comprehensive underwriting template here. All right, the comprehensive starts to get a lot more complicated. So if I'm a beginning investor, I spend my time back on those first templates first. But at some point, I want to deepen my understanding and go for the next level. All right, this is it, the comprehensive tab. This all comes in one free package. Go to multifamilygeeks.com and download a current copy. We're constantly making changes / updating the training in it. If you scroll down here, you will find the same effect, all right? There, it's a description of what you're filling in at each of the above entry points, okay? And this has got a lot more than 30 data points. That first one is meant to be a 30-minute or less. You're going to spend another hour to 3 hours when you move to this comprehensive underwriting. But this is what you should do before you make an LOI. We will not, submit an LOI with you and your team until this comprehensive is filled out and we're satisfied with what we see in terms of IRR for LP investors and for the overall project. So as you go to each of the panels in here, you scroll to the right and you'll keep moving through. You'll notice it says step 1, step 2, step 3, step 4, step 5, step 6, step 7 and 8 is a new panel. This is a larger screen you're looking at, but if you're looking at, for example, a 14-inch Mac screen, this will fit on one screen here. Now you're going to step 7 and 8 and 9. And for each of these, as you scroll down, not only will you see notes here, but you'll also see instructions, comments, thoughts. What is a classic unit, right? Classic units are not upgraded or have not been upgraded in the last 3 years. That's our opinion, you guys. Different underwriters are going to come at it different ways. They'll say, 5 years, that's an upgraded unit. I had a broker put upgraded units into an OM last week where this thing was renovated in 2011. The current date of this video is 2021. That's a renovation 10 years ago. For us, we do not consider those renovated units. That would return to the classic units definition for us. And when you're filling out the rent roll and this, and you're starting to think about upgrades to what you're going to do to the property to add value, just like if you're a single family home flipper, you're thinking, I'm going to redo the bathroom, the kitchen, whatever it is you're coming up with. I'm going to spend 15 grand on the bathroom, I'm going to spend 25 on the kitchen, etc. And now you come up with your numbers. We're doing the exact same thing. We're just leveraging it out over 200 to 300 units. And our argument to you is that in a lot of cases, the amount of effort and work you put into a single family home can be maybe not, maybe it's not the same amount of work on a 200 to 300 unit, but in a lot of ways, it's compounding your efforts. And we have this idea of economies of scale. you sell one car and it takes a certain amount of work. But if you're a car dealership and you're selling 100 a day, there's an economies of scale where, because you're doing 100 now, it just gets a lot easier. Every one transaction is so much simpler than that prior business you had where you only did one transaction, right? So classic units, a micro reposition is a cosmetic upgrade of paint, maybe flooring, lighting fixtures, kitchen cabinet, and bathroom hardware. Plan to spend $3,500 per unit on a micro reposition. So we're trying to integrate education into the model. We're trying to underwrite with underwriting teams that are growing and deepening their understanding, and also we're trying to clarify where do we stand on these issues, right? Basic reposition. A basic reposition includes wood laminate flooring, lighting fixtures, kitchen hardware, bathroom hardware, white appliances, painted cabinets, new laminate kitchen and bathroom countertops. Plan to spend approximately $6,500 per unit on a basic reposition. Yes. Where you are in the country matters. Yes. Other conditions apply. But in a general context, you're trying to figure out where do we stand when we underwrite the property. Here's a gold or deluxe reposition. A gold or deluxe reposition includes all of the upgrades for the prior reposition and black appliances now, engineered kitchen and bathroom countertops, gooseneck kitchen faucets, and upgraded bathroom faucets. Plan to spend approximately $8,500 per unit on gold or deluxe repositions. And then there's a premium or platinum, and basically we roll everything into these 1, 2, 3, 4, 5 kind of levels of understanding of renovating, and we call it repositioning in the multifamily space units. So a platinum or premium or elite reposition. A platinum or premium or elite reposition will include all of the upgrades of the prior reposition, plus amenities usually associated with new properties. Features include keyless entry, internet-controlled thermostat, marble or other high-end kitchen and bathroom countertops, soft-close kitchen cabinets and drawers, stainless steel appliances, and an ambiance lighting package, right? Things that you would go, okay, plan to spend $10,500 and up per unit on a platinum or premium or elite reposition. We bought a B-class property in an A-class neighborhood, and we put in 12 grand per door. Okay, it just happened to be where that was and the time it happened, and etc. So that helps you start to plan what your upgrades are. And this full underwriting template will roll you through redoing the rent roll. You're going to re-examine that. You're going to go through comps on rents, and again, education at each one of the panels, right? Explaining the different entry points. So keep scrolling through the comprehensive, and it gets a little bit simpler as we go in terms of there's fewer numbers to enter as we roll down through these. It gets a little bit easier. Some of these transfer over from the basic underwriting into the P&L transfers over. A RUBS analysis, and then up to a 10-year pro forma for us to examine when do we buy this thing, when do we refinance it, and when do we sell it. So the point of this video is just to get across to you that this free underwriting template is trying to walk you through as many aspects of underwriting as possible with education as a primary focus. The summary tab will take you to returns, where you can examine those returns as a great tool to start to ask, if an investor puts in $1 million into this 200 to 300 unit multifamily flip for the next 3 to 7 years, what kind of returns can that investor expect to receive? And if you're a flipper, you're familiar with this. You know, you borrow money all the time to do your flips. None of us are going to use our own money to do a flip if we don't have to. It's worth the interest payment, right, to use somebody else's money. Just gives us flexibility. All businesses borrow money to do their work, okay? So waterfall, loans, and even a change log back here of what has changed in the template over time, given the different versions of the template. So the point of this is just to try to get across to you that when you're working with us in your underwriting, and we're thinking about working together where we can sponsor you to buy your first or next deal, we are trying to partner with you in an educational perspective. We also offer other elements, whether it be mentoring. We consider ourselves a multifamily private equity firm incubator. Several of our teams have moved on to do things that we consider even more advanced than other groups we've seen. So part of it is all just this idea of education, right? So when you download our multifamily underwriting template, let's go here and try to go to, I might model what you would type in, multifamily geeks. Let's see if we can find us on Google. Okay, so we pop up right here, or just type in multifamilygeeks.com. It's a pretty unusual name, so we're reasonably easy to find. Let's let this populate here, some of the properties we've been in, some of our past work, some of our sponsorship underwriting teams description, and this is where you'll find at the bottom our free underwriting template. Simply click on the link here, and I say simply, but let me go back a little bit. Okay, sometimes it's not that simple. We like to use Chrome. This is a Google Sheets doc initially, which if you have Chrome will open up. You do not need Excel to do this. Okay, however, it helps. I guess I don't know if it helps to have Excel, but you just click on it. It opens up the template. Click File, Download, Excel. And this is going to download a copy to your Downloads folder. And then don't open it if you don't have Excel like me. I don't have Excel anymore, and I loved Excel for so many years, so I've since stopped using that. I use exclusively now Google Sheets, right? So if you're going to come in here and do a new folder inside of Google Sheets, which is inside of Chrome, right? And let's do, no, we want a folder. Say new folder, and let's name it, right? Let's call it 0110 new property. And so you would open up a folder to do a new underwriting of a multifamily property. You would say property name. You would say maybe the date you're opening this folder so your teammates can see when it is. And maybe you'd say when it's due. Maybe it's due July 1st, right? July 1st, that gives us a week or two to underwrite it, 21. And of course the dates when you see this will be outdated, but don't worry about that. The concept is here, right? Open that new property, go into that folder and say new, file upload, and pull that off of your downloads folder. So here's the downloads. This one, this one. And so this is it. You've now got a copy of the free multifamily portfolio trainer, we call it, because it is a training tool and it's a full-on, we write LOIs from this and we do buy properties from this template. Okay, this is it. This is what you need to safely buy if it's filled out correctly and we know what we're doing. This is what you can be confident in using to buy a 200 to 300 unit multifamily property. And now when you click it, it's not opening in Excel, it's opening in Google Sheets. So I do not need Excel on my hard drive anymore. And the great part about Google Sheets is, while we have lost some capacity from Excel, we've gained the ability to share this document with our team. We can share this file folder. Right? So this file folder, which now has, we'd upload the T12, upload the rent roll, and upload the OM into the single file folder. We can now say share, and we can start to share this with other people on our underwriting team. We could send it to different sponsors, etc. They can go, okay, take a look at this. We're underwriting this property. We think we have a good one. Will you sponsor it, right? So you can just share the folder with them. They can see all the underwriting, etc. And then the other thing is when you're in the actual document, this one here, once that folder is shared, then this document gets shared with those people too. Now your team can underwrite this together, right? So as you're starting to fill out these templates and analyze the T12, see our other videos for the T12 and the rent roll and the OM analysis, right? As you're starting to underwrite these, now your team can come in with you and start to help you not only underwrite it, but start to question what you're looking at, right? Did you get the property taxes right? It's going to be the questions that you all ask each other. I don't know, let me call the assessors. Okay, you call the assessors, I'm going to call the insurance broker and see if we can get insurance lowered on this property if we buy it. right? Your team gets to now engage that property as a force rather than just an individual person out there. And that is one of the big transitions. A lot of our multifamily investors slash syndicators are former single-family home flippers. And one of the biggest transitions you're going to have to make is you could do the entire thing by yourself as a single-family home flipper. In fact, it was way easier by yourself. Once you get to these 200 to 300 unit properties, you do need a team. You do need to parcel out the work, and it's going to be a development of a 5-person team. It's going to be your best goal to go ahead and make this an ongoing multifamily private equity firm. Okay, so hope all that background helps. Hope this will get you started. Let us know how we can help you. We do have the underwriting teams. We do have trainings and mentoring, so hit us up for those, and we'll see if we can get you on your way. All right. This is Max Rock with multifamilygeeks.com. Hope this helps.